I'll message Garth, see if he's awake.
Yeah, go right ahead. So I was fixing up this slide here. I was trying to show both for the upside and the downside.
Mm-hmm.
But let's start off with the idea of the Elliott waves. So, you know, as we've discussed in the past, you know, you understand already when the market touches the trend line, we're looking for 3 touches, right? The trend, and then we're paying attention to what happens after that touch, like when the market revisits that trend line. So we're looking for it to break it, or we're looking for it to, you know, test it and shoot up to the opposite side.
Yeah.
So as we notice here, with this uptrend that we're paying attention to, you have wave 5, you have wave 3, wave 1, right? They're the pushes to the upside. And then, you know, obviously wave 2 and 4 are simply just the corrections.
Yep.
So as we go ahead and start looking for an opportunity to either enter, if we were scaling our entries, or if we were going ahead and, you know, just waiting to see what's happening. So you identified the structure of the market, right? We look for when the market's on an uptrend, we wait for the market to break that trend line, come back and retest that last previous highest low point. And we should see the market continue going down. Now, I want to go over the chart with you and show you impulsive waves and the characteristics they show. And then we're going to talk about corrective waves. Now, I want you to keep this in mind and write it down. If I say correction, I'm not talking about corrective waves. I'm talking about just a retest, you know?
Yeah.
And if I'm talking about a corrective wave, we're not paying attention so much to the actual retest. Now, of course, for every breakout, there is a retest. And for every retest, right, we're paying attention to what happened prior to that. So let's just go ahead and focus on finding the Elliott wave and then being able to identify what each wave means, okay? So let's look at when the market dropped, right? You see how the market dropped?
Yeah.
And then it came back up, and then it dropped again. I want to pay attention to what happened after this. So if you notice, the market shot up and created a higher high in this sense.
Yep.
Right? Here's our higher high. Right? Now let's pay attention to this movement right here. Notice what happens. Here's one move. I'm gonna make this a bit more thicker so we can identify it. Excuse me. Do you see this one move right here?
Yeah.
Notice the correction. If I were to identify just support and resistance, right? Here's support. Here's support of these breakouts, right? Here's the market making its move up. It came back to retest. Let's look at our graph. Here's the initial move. Here's the retest, right?
Yeah.
Here's the second move after the retest.
Yep.
Right?
Wave 3, yep.
Then we have the next one. And then we have that last push up before the market shot down, right? Now, what do you notice? They say the way I learned to understand the Elliott wave was you don't want to confuse 2 and 4 with the ABC corrective move that we're going to talk about. So we said again, a correction and the corrective waves, 2 different things, right? Obviously, it is a correction of the initial move, but I want you to always pay attention to the overall structure, right? So when the market shoots up, we always want to see a retest to confirm it to continue going up.
Yeah.
Right? So when it does so, this is how the market's going to go. So if this is the move that the market is making, right? And this is the last lowest high point as we discussed the market structure, and the market breaks it and then breaks it again and retest.
Yep.
Right? Notice what's happening. Overall, what's this structure showing you?
Yeah, it's basically two channels and it's come back for a retest.
It's come back for a retest. Now, in order for it to continue going up, we need to see a breakout and the retest and continue going up, right? As in prior. Now, why is it that the last previous lowest high is so important? Because if the market does not respect that price point, right?
Which one? That last, higher low. Get the
That last
highest low.
high
Yep.
low point, we're looking for the market to do what?
Carry on going down.
Why is that? Why do you think that is?
Because it's broken that area and hasn't respected it.
Here's the overall breakout.
Yep.
And this is a retest. Now, if it did break it, we would need to see a retest on the upside.
Yep.
So because this is the last lowest high point, if we notice, if the market retested it on the same price point and on the same zone, then we would see some type of strength kicking into the movement going up.
Yep.
Okay, so now you understand that, right?
Mm-hmm.
Let's go ahead and focus back on this movement that the market is doing. So let's say this was 0, this was 1, this was 2, this was 3, this was 4, and this was 5.
Yep.
And this was 5. Right?
Yep.
We shifted our focus to understanding that and identifying that after the fifth wave, right? Let's look at what each meaning means. So wave one is the initial move towards the direction of the trend, right? This is when a few traders think the market will go up, so they start buying, causing the price to go up, right? Now, if let's say these are scalpers, and once the market reaches wave 2, this is when people start taking profit on the trades, and that's when the price begins to fall.
Yep.
Makes sense?
Yep.
And now we go on to wave number 3. This is usually, in my eyes, and I'm a bit biased on this, because in a way it can be either wave 3 or 5. Usually these are where the price will extend its push. So you notice when the market shoots up or breaks past, let's say the market was dropping. Let's say the market was dropping and then it broke past the last previous lowest high point. And it comes back down to retest, right? We're going to see the market make a strong move to the upside.
Yep.
So as we move forward and understand that, we know that wave 3, 90% of the times, along with wave 5, those will be the two areas we'll look to find that extended push. Remember a few months ago, we were trading USD JPY, and the market just kept going up and going up and going up, but it never came back down to retest.
Yeah.
Think of
that's
that. That's an extended move. Usually that's just because the buyers are still holding on to their price, causing price to rise even more. Now, in our eyes, if we're looking at a smaller time frame, we're like, yo, why does this thing continue to go up? It should die by now. But this is usually why. When you understand that within the waves of the market, you know that between wave 3 and wave 5, you should always see some type of extension. Now, it can happen on wave 3, and it necessarily doesn't have to happen on wave 5. Make sense?
Yep. Just got to happen somewhere between those two moves, eh?
Exactly. So pay attention between the first wave and the second wave, when the market broke past and kept going up. Notice how this move right here was our extended move. So what happened to wave 5 after the number 4 came back down to retest that breakout? It was just a short movement up. And what happened?
Yep.
It failed to create any higher highs, right? And it started creating lower lows. We had a nice little double top right here, and the market dropped.
Yep.
Right? So as we move forward, where did the market go ahead to drop? Where did you know the market dropped to?
The last highest low, no, last highest high, eh?
The last highest low point, and it failed to break past that.
Oh, yeah, okay, yep, way around, yep.
Because here's a higher low.
Mm-hmm.
Here's a higher low. Right? Here's another higher low. Right?
Yep.
So what happens in this case? Let's say we go ahead and talk about identifying the supply and demand of this price.
Yep.
And we went ahead and just drew our box to identify that price. And let's say we looked left to see what caused price to shoot that high. This real quick so it doesn't interrupt us. What caused price to shoot that high? And if we paid attention to the previous low, higher high over here, and we just drew this box based off of our zone right here that we identified, right?
Yeah.
We start getting closer to understanding why price rejected that. Notice when the market shot up, I did this a little too late. Notice when the market shot up and failed to break past this point here, this is on the fifth wave. What did the market do? Came back down, retested it, dropped, failed to break past our demand area. Notice how the market came back, hit the actual bottom of this zone, and then started making a downward move.
Yeah.
Right? So now we're going to talk about corrective moves. So now you understand what each wave means, right? Wave one, this is when the market makes its initial move, right? Same thing goes as we're looking for the market when it's going down. We'll look at that example next.
Yep.
But here's wave one and wave two. Wave one's the correction. Wave two is the correction of wave one, right? Wave three is usually that strongest push. So we're going to see a continuation of price. And wave four is just a retest of that breakout.
Yeah.
Wave five is usually when it reaches its peak and people holding their positions tend to believe that the market's not going to continue. And what does that mean? Now we're going to take profit and we're going to start looking for sales, right? But now we're going to talk about corrective moves. Now, corrective moves, I want you to keep this in mind. The corrective wave is just a three-wave counter trend. Right? So think about this, and this is the best way to help you understand it. If the market shoots up, right? And as the market was shooting up, right, there was some corrections here. Right?
Yep.
This is the last wave. This is the highest point that it reached. So what the market does, it drops, comes back to retest, it drops, right? And if it doesn't, if it doesn't retest at this point, then we'll see usually what? The market come back and continue going up.
Yep.
Proper structure, right? Here's the breakout, here's the retest, here's the continuation. So think of the 5-wave trends as the impulsive move.
Yep.
The 3-wave trends, which we're going to identify as A, B, and C, right? That is the counter trend. Make sense?
Yep.
So here, let's look at a chart right here. You see how we have the market going up? So we have wave 1, wave 2, wave 3, wave 4, wave 5, right? As the market fails to break past here, we have wave A, then we have the retest, wave B, and then wave C.
Yeah.
Right? And then usually you'll see if the market does retest, then you'll see the market continue going down. If it breaks out, then guess what this purple line represents now?
Change in trend.
A change in trend, right? and we'll have a new 5-wave move.
Yep.
Now, let's say the market did do it going down, right? Let's pay attention to this move right here. So here we have the market moving down, came back, corrected itself. This is all one move right here, right?
Yep.
Here's the correction. Here's wave number 5. Let me send this. Now, if you have any questions, please ask.
Nah, all good, man.
Comprehending, right?
Yep. I've sort of learned about Elliot wave before,
Mm-hmm.
and it's it's really handy, isn't it?
Yeah, because check this out. So this was our last point right here.
Yeah.
So let's say if we shifted our focus to this being wave number 4.
Yeah.
This is 5, because obviously it's never pretty. The market's never makes.
Yeah.
The market's never as pretty as we want it to. We would love for it to look.
Yeah.
But notice how the extension between wave 2 to wave 4, we have a deep drop here. And on wave 5, what do we have? Check this out. We'll go back to market structure, right? We'll identify our last lowest high point.
Mm-hmm.
If we grab our trend line, it's not the prettiest trend, but
yeah, it's good. It's good seeing your spin on it. I like it.
here's our last previous high point right here. When the market reached that price, after it broke past it, notice what it did. It shot up. And it failed to break what? Let's put it all together now.
Previous.
We have one price right here. If I drew my zone, once I identified that the market failed to break past that zone, here's the retest. What did the market do after that? Drop.
Continue dropping,
Here's how we combine it all with market structure, supply and demand, right? Here's our last previous highest low point.
Yep.
Right?
Cool.
Here's the last lowest high point. Am I saying it right? Highest low point. I don't know why I always get my tongue twisted.
Yeah. Oh, it's easy to get mixed up, eh?
So
high, low, lower, high.
Here's the retest. Look how the market's been dropping.
Yeah.
So always keep that in mind. Now that you understand the corrective and the moves, whenever you find yourself that you're sitting there and you're saying to yourself, man, why is it that this market just keeps going up? Don't be afraid to go to the higher time frame and count the waves. Here's wave 1, here's wave 2, here's wave 3. Is this wave 4? Are we going to expect one more push up? If so, to where? How do I confirm that? What was my last highest point of the market? Okay. What was the one before that?
Yeah.
I'm going to look for it. Just scroll. There's one up here. That's a big zone. Look at this last lowest high point over here. If I draw a box, identifying that.
That's it there, isn't it? Yeah.
That gives me an opportunity to see a 5th wave and see either if the market doesn't break past that point, then we'll see the market just drop. And how do we know where the market will drop? Simple. Follow up your analysis. Notice that this is an uptrend. Here's an uptrend. Check out this little uptrend as well. You want to go ahead and get as detailed as possible. What was my last lowest high point? There's one right here. There's one up here. So if the market breaks it and retests it, I understand that I can possibly ride this trade from here down to this last lowest high point, or higher low point, excuse me.
Yeah.
You can at least guarantee yourself about 160 pips. If you can just identify that by using, if you have already Fibonacci on your tool, you understand Wyckoff, you understand the Elliot wave now, you understand
How it all ties in.
breakouts.
Yeah.
You see how it all starts to tie in, and all you have to do is pick and choose which weapon you want to use so that you can move forward.
Yeah.
The game just really becomes a game for you.
Does so how does Elliot wave sort of working with Wyckoff?
So Elliot wave and Wyckoff, let's pull up our Wyckoff sheet. Wyckoff. Notice the cause and notice the effect, right? Excuse me. Notice the cause and the effect. Here's wave one, right? Here's wave one. Here's wave two. Here's wave three. Here's wave four. Here's wave five. What did the market do? Came back down and extended even more. So that means we're looking for a different wave, right? So where do we start off of? Is it the breakout of here and the retest confirmed here? Or is it this breakout and then this is the retest? And we have wave one, right? We have 2, 3, 4, 5. Notice what happened. That's the climax now, right?
Yeah.
So that's how simple it can be. So what happens when the market starts to distribute? What are we looking for? We're looking for the market to start consolidating sideways, and before it starts moving forward, right, we're going to start counting off of the retest of this failed rally, right, or the fake out. Yeah. Here's 1, here's 2, here's 3. What is usually the strongest push? 3 or 5, right? 5. So that explains that rally or that effect of this cause here.
Okay.
Make sense?
Yep. Yep, definitely.
So now that we're looking at that, now we know as the market is dropping, if you find yourself counting the wrong way, just identify your structure. Let's go ahead and look at a larger time frame. Identify structure, right? What happens? Here's accumulation. There's accumulation in price around here, right?
I can see that, yep. So there's wave 1, the retest 2.
Here's wave 1, 2, 3. Failed to continue going any higher. So what did the market do? Drop down, came back, retested. Here's the
4. Did you look at that as 4? And then obviously it's making its extended wave 5 now, which ties in with the double top.
It could be, or is it that this is the actual trend we're paying attention to? So is this wave 1? This is 2, right? From here to here, the market came back and revisited. And what did it do? Shoot up. That's why I want to talk to you about the different type of corrective waves. So you have your regular corrective wave that I showed you of a trend. You have the triangle corrective waves, which go all the way from A, B, C, D, and E. And then you have your A, B, and C, which is more like a double bottom structure, double top structure. You understand?
Yeah.
And all of that is just because the market can move upwards, it can move downwards, and it can move what? Sideways, right?
Sideways. Yeah.
So that's why I want you focusing on that key component. Let's identify what's potentially happening here.
Yep.
Right? Here's the market trending on this channel. Right? But what are we noticing here, Hemi? I don't know what happened with this candle here.
Is that a candle or is that a line?
I have no idea. I think it's a candle. Did it shoot up all the way to like 21 or something?
Oh, I don't know. I didn't see that, but might just be the broker.
But let's say we identified the first wave and the correction, then the third wave, right? Then the correction, and then the fifth wave. What happened to the market? It did its 3-wave correction. Here's 1, here's 2, here's 3, right? A, B, C. What did the market do? Shoot up. See how it ties into this? A, B, C.
Yep.
Then we have the market enter a whole new paradigm of waves. Here's 1. Here's 2. Right? Here we have the market trying to continue. It didn't create a higher high in this sense. Came back down. What happened after that? Shot up.
Yeah.
You see? So how do you feel right now understanding supply and demand? Market structure. Understanding
pretty good, man.
how to use all of this along with confirming your information with Fibonacci's, right? You have the Elliot waves. You have the break of structure. We have Wyckoff, understanding accumulation and distribution. Notice how, what are you adding to your arsenal? More and more stuff so that we can go ahead. Now we understand the influence of the fundamental market, right? How the news comes into play, how to read them. You understand how to check the strength of each currency. Now you start feeling more confident and you see how everything just starts lining up. Remember when we started off and it was like just understanding what support and resistance was? Then we went ahead and learned that support was for the price point and supply was for the price area, right? And supply is just another form of resistance just on a bigger scale. And demand is another form of support just on a bigger scale because we're not focusing just on one price. We're focusing on a bunch of prices. And once you start identifying these zones and you're able to understand that if even just as if it breaks support or resistance, and if that support is broken and retested, then it now becomes a resistance. Then we start understanding that if that supply area is broken and retested, then it now becomes a what?
A demand zone.
There we go. So you see how it all starts tying into each other. And then we learned about the pin bar. The pin bar helps you understand the exhaustion of the trend. Now we start identifying, along with the Elliot wave, we see a pin bar print. What does that tell us? Uh-oh, we have exhaustion of the market.
Yeah.
Right?
Possible reversal here.
Correct. And that's why I want you constantly applying this. So now that we've gone over that, let's go ahead and have you identify some Elliot waves, put them together with your, start putting all this together so that we can go on and develop a structured, you already have your structured system, but now you understand that whenever you find yourself in jeopardy, you can say to yourself, wait, why is it that this trade is continuing to go? Okay. Yeah. My fifth wave was supposed to end here. Oh, wait, I'm supposed to keep in mind that number 3 or 5 usually is the extended wave. So if 3 wasn't the extended wave, then it happens to be that this is the 5th extended wave.
Yeah.
So what is my next highest high point? What was my last high point that the market revisited or hasn't revisited that we're probably testing now? You see how that mindset can just shift you to how before when you would get burnt out, it was like, man, I'm getting burnt out. And now it's more like, wait, why is it happening? Okay. Let me close the Now I know that, we're actually going to revisit this last previous high. Maybe it was a daily resistance area or something like that.
Yeah.
You see? So then now you start developing this consciousness of the market and you're able to what? Interact with it so that you can come up with a secondary plan or, just change the course. Okay, I'm not selling no more. I'm actually going to start prepping to buy. So maybe I lost like 20, 30 pips. Let me up the lot size a little more so I can find that I'm going to wait for the next retest of the last previous point, and I'm going to enter it and ride it to my target up here. And keep in mind, that, you know, we're still on an uptrend and the pound is stronger than the Aussie dollar right now. So everything's in favor for me to continue, at least make back my money and more.
Yeah.
And now we start looking at that. So
Cool, bro.
go ahead and share me your screen and let's identify some of this. Pretty dope though, right? Like how it all ties in.
Yeah, it's good, man. Shit. Screen.
When you were learning this in the beginning, did they help you tie it all together?
What's that? Not really. I guess not how you, you know, how you sort of put it there. They sort of, so I learned that, you know, like identifying your wave 3 and your wave 5 with using MACD.
I don't know why people complicate it so much.
And also identifying that where wave 5 ends, generally you'll find a divergence event, which signifies you know, the beginning or the end of a move. So, which I still use now, like pretty good, you know, like it's just something else in there. But having like being aware of all these other areas, like we just went over there, is good, you know, because then it ties into all these waves type thing. You know what I mean? So yeah, it's good. I like it, bro.
I'm glad. My goal is to just make sure that you identify confidence. You understand? Identify that confidence within yourself so that when we do search for confluence or anything like that, we're at least putting ourselves in a position to not only understand what potentially can happen, because understanding what potentially can happen is dope, but knowing how to come up with a emergency plan if in case with what we planned out doesn't work out, but we're still making money. The point is to always, you know, come up with plan B to make plan A work. You understand?
Yeah.
And once we have that plan put together, if I know my best case scenario, if I know my worst case scenario, I'm able to come up with a plan and attack it, as opposed to just being, you know, so charitable and giving everything back to the markets.
Yeah.
While you do that, give me 1 second. Let me check on my son. Sorry about that, Hemi.
No, that's all right, man.
Perfect.
I'm sort of seeing it like this. You know, there's the 5 and then A, B, C, and then continue on our trend maybe.
I'm not that big into harmonics, but if you notice, it's also like kind of a harmonics pattern, right?
There's one in here.
Right, that there can either be a signal to come back and revisit. You know, after C, we may see a push down to like revisit zone number 5 because it broke back into this trend here.
Yeah.
So we could either see a break to here and then worst case scenario, come back and retest our monthly support and resistance, or we'll see a new.
You can sort of see something like this.
There we go. And now you can start predicting a better flow of what's happening.
Yeah.
Makes sense, right?
Yeah, big time, bro.
Now, I want to show you something else. Compress your screen a little bit and let's put a higher time frame and extend your trend lines. You know how to extend them, right? The ones you just drew.
These ones?
Yeah. Yeah, right there. Right end. Left end, actually. Extend the left end. And pick the third one. There we go. Look how it respects that 4th wave. And then do the same. Do the same for that one. Now, scroll out. Let's look to see if any of the previous highs respected that area. Has the market ever seen that high?
Oh, nearly.
Nearly, right?
It's close.
Is there any higher price points above that?
Nah. Oh. Nah, it doesn't look like it.
Not at all. But you see, you'd be surprised. Sometimes you do that and you're like, whoa, look how it adds up, you know?
Yeah.
You always want to verify for yourself.
I'm only on a 1 hour chart, so maybe that's why.
Yeah.
Yeah, that's cool, man. That's good. I'm just got to use that. I probably don't use the Elliot wave enough, to be honest.
I mean, look, you don't have to. It's just like you don't have to use Fibonacci. But whenever you find yourself on the fence of like, man, why is it that it continues going down? Why is it that it continues going up? Whenever you find yourself in question, you now have an arsenal to be like, okay, let me now look. You look back at your notes. Okay, Jose taught me Elliot waves. Jose taught me Fibonacci. Why was it that the market made such a strong push against me? I had everything set up. You always go back and look, man. You'll always find the answer. You know?
Yeah.
And that's why we have the 3-step system in place, so that you can always have your answers. You know, you don't have to go through every question on the checklist to before you enter a trade. You'll probably be fried by the time you get to like the daily chart.
Yeah.
But the point is you take what you need and move forward. As long as you know how to use what you need to use when it's presented, that's how you become a consistent trader. That's what helps me out, you know? Because I understand all of these concepts, and I'm not more on the sense of reacting towards what the market did. I'm more interactive, looking for why it did it. Okay, no, it broke this zone. Okay, why did it break this zone? All right. You notice how occasionally I'll shift I'll kind of make a little adjustment to my trading style. You know, I'll be more of a Fibonacci trader because I've built like a run with using Fibonacci, and the next thing you know, I'm trading, focusing on just a retest of the last highest low point. I'm just always looking for the adjustment of what's working for me, you know? And like that's how I'm able to continuously make a profit off of the market. And then you'll also notice one of the most important things, which is, you know, that not every pair follows the same rules. Technically it does, but you're not going to possibly find the opportunity to trade, you know, off of, let's say we were looking at GBP AUD compared to AUD NZD or GBP NZD. You know, GBP NZD does a lot of consolidation and a lot of strong pushes.
Mm-hmm.
Look at a pair like USD Mexican. That's something that respects the crap out of market structure. But when it moves, it makes a move of like, you know, a few hundred, few thousand pips. We're looking at USD 30. You look at USD 30 and you start finding yourself identifying specific opportunities. But because of how strong and how many pips it makes in one movement, that's why most people can't survive. But guess what? If you're able to time a trade right, because of confluence and identifying what can happen or what can happen, or because, look, this is my fifth wave. It's exhausted. We have a pin bar. It failed to break this supply zone. It's at the 78.6 line. I'm getting ready to sell. You see? And you see how it all starts to come in, and then guess what? You have confluence. Boom. You have a plan in motion. Now it's all a matter of attacking it.
Yeah. That's right. How does crypto hold up to market structure? Is it respected, or is it a bit sort of over the place?
Look at it.
Oh, I must have done it before. Knows when I've done this.
Look at the move up. Pay attention to the move up. When the market shot, right? Pay attention to when the market shot up. Switch to your Fibonacci candles as well. I want you getting used to using them.
I just don't like those colors.
Yeah, you can switch them up. Pay attention. Why did the market explode so high? Here's a push up. Here's a correction. Here's a push up. Here's a correction. Here's a push up. What happened with the fifth wave? The fifth wave was an extended wave. So what happened? Market came back and look at the three waves, right? A, B, C, right? Once we saw that the market failed to continue breaking past here, look at the last move right here.
Yeah.
So if I paid attention to my last previous lowest high point, where was it that the market originally at the end of the day broke out and kept going? Right there.
From there, or even down here.
We have one right here, one right here. There's a whole bunch of them. Market structure, right? Here's the last previous, here's the trend. Here's my last previous lowest high point to the trend. Look at our touch right here. And look what the market did.
Yeah.
There's no difference, bro. What I'm teaching you is how to understand market flow, how the market flows. You understand? Yeah. All we got to get good at is identifying it. Here's another retest, right? What did the market do? Retest. Where did it retest? One of the last highs. Or if not, check this out. There's probably a demand zone right here. Make sense?
Yep. Definitely, bro. I guess, I've never really charted it up, so I guess it'll just come down to me just charting more.
Just putting it to test. So now,
man.
Compress this a little bit. Let's look at the overall downtrend that the market has been on. right? Draw that downtrend out. Start from the first rejection, yep. And extend it. Let's look at what price is currently doing as well. There we go. So now, let's look here. Look, the market broke past it. So in order to confirm that,
need to retest today.
We need to see a retest, and now the market start making its move up.
Yeah.
Is it possible? Look how many demand zones are in play.
From there.
All the first, we're paying attention to previous rejections in price and drawing our parts. And now once you start trading, if you're looking to day trade, right, you're looking at a smaller time frame to understand what's happening, right? Probably shift our focus to more on the 4-hour chart or the 1-hour chart. If we're looking for a long-term trade, we're looking at the daily, the weekly, right? What does that remind you of?
Of 3 steps.
There we go, my brother. You understand? So
yeah, cool.
I'll
just chart it up and just get practicing.
Yeah, keep practicing, keep working on it. Let's end it here. I want you to spend the rest of your time working on this, so I can upload it and resend you the video. I'll send this to Garth as well, so we could so that we can get going. I want you for your homework. Let's look at some crypto, right? Look at some trades to potentially enter and make some moves. All right.
Okay, just write this down. Homework.
So